Hello, welcome to this brief presentation of how the United States taxes Americans doing business overseas. I'm Jacob Stein. I'm a partner in Aliant's Los Angeles office, and international taxation is one of my major practice areas. So the United States has a specific set of rules, a fairly extensive set of rules, of how it taxes U.S. taxpayers, U.S. citizens, U.S. residents who do business outside of the United States. So why do we need to have a separate set of tax rules for Americans who do business outside the United States, right? We obviously have very extensive rules for Americans who do business here in America, in the United States. Why separate rules for doing business overseas? Well, imagine the following hypothetical. I'm going to run you through a few of them so you can understand kind of the background for these rules and how they work. The United States, as a general rule, taxes its citizens and its residents on their worldwide income. So if I'm an American and I generate income in Uruguay, the United States will tax me on that income. So if I, as a natural person, go to a foreign country to do business, what will be my U.S. tax consequences? So let's say I'm going to manufacture waffles in Belgium. It's a very popular business in Belgium, right? I'm going to go to Belgium, I'm going to set up a little waffle maker, I'm going to make waffles, I'm going to sell waffles. My U.S. tax consequences are very straightforward. Whatever profit I generate on selling waffles in Belgium, the United States will tax me on those profits. What other forms of business can I have in Belgium? Well, maybe I can set up a partnership with a Belgian partner. I can set up a joint venture with a Belgian partner. And now the two of us are making waffles and selling waffles, and we're making a profit. How does the United States tax me on that? Well, the United States will tax me on my share of those profits as those profits are earned. So if I'm doing business in a foreign country, and I'm doing business either in my name or through some sort of a partnership type of an arrangement, I am currently taxed by the United States on that income. And when Americans do business overseas individually or through a partnership, the United States does not have any special rules of how that is taxed. The standard rules that apply to taxation of Americans here in the US will apply to me doing business overseas. But now let's imagine that I'm going to manufacture those waffles and sell those waffles in Belgium using a Belgian corporation. So let's look at the flow of money and taxation. Now we have a Belgian corporation that is making waffles, selling waffles, making a profit. Can the United States tax the Belgian corporation? And the answer is it cannot, because the United States does not have any jurisdiction over this Belgian corporation. It's a foreign corporation that has no connection to the United States. It is not doing business in the United States. The US has no authority to tax this Belgian corporation. So what may happen in a case like this is if I am doing business abroad outside of the United States using a foreign corporation, I have the ability, the possibility of earning money overseas, and the United States will not be able to tax those earnings. And that's where the concern lies, right? The United States Congress believes that we are creating an unfair advantage if people are able to do business outside the United States in a corporate form, and if they do not bring money back to the United States for a long period of time, the U.S. does not get to tax those earnings. So compare that to doing business in the United States through a corporation. Corporation will be taxed, right? So why should there be a different regime if we are doing business outside of the United States through a foreign corporation? So in 1963, I believe, U.S. Congress enacted Subpart F of the Internal Revenue Code that deals with taxation of foreign activities of U.S. taxpayers. And primarily, that subpart of the Internal Revenue Code is focused on taxation of doing business outside the United States through a foreign corporation, right? Because again, if we're doing business as an individual, we're doing business through a partnership, we are taxed currently by the United States. If a U.S. corporation is doing business outside of the United States, it is currently taxed by the United States government. But if we do business outside the U.S. using a foreign corporate entity, a foreign entity that for U.S. tax purposes is treated as a corporation, that's where this separate set of rules comes in, because now the United States is concerned that we are able to defer our income from offshore sources. and there is no way for the United States to tax that income. So in another video, we are going to discuss how the United States taxes these foreign corporations. These will usually be known as controlled foreign corporations, and that's where this separate set of tax rules kicks in. In addition to these foreign corporations that are called controlled foreign corporations, there are also foreign corporations that may, for U.S. tax purposes, be classified as passive foreign investment companies, PIFICs, very cute little acronym. And these are passive investments that Americans have overseas. And again, we have a separate set of rules, and we will have a separate video on how the United States taxes investments in passive foreign investment companies. But this is sort of a word of caution. If you are doing business overseas, the first thing you need to look at is how are you doing business overseas? Is it in your name? Is it in the name of your business entity that you have here in the United States? Did you set up a joint venture with a foreign partner outside of the United States? Or did you set up an entity overseas that for U.S. tax purposes will be treated as a corporation? If it will be treated as a corporation, now you need to be aware of the separate set of tax rules known as Subpart F of the Internal Revenue Code. Here at Aliant, we do a lot of work assisting our American clients who do business overseas, who invest overseas, enter into joint ventures overseas. We are well aware of what these rules are and how to structure around them, and we would be happy to help you. Thank you. I'm Jacob Stein.